Hello, everybody, and welcome back to the Daily Analysis and Insights show. Today, we're going to be covering three interesting topics. The first one is, are we in an alt season? And we're seeing now signs that Bitcoin is dropping in terms of its strength versus altcoins. And where are we within this altcoin season period? Are we just at the beginning? Are we in the middle? And so on. Second topic is going to be insider selling. So there's a bunch of insiders selling stocks at the moment. This is understandable, all-time highs, and these levels have not been seen since 2021. So interesting topic there. We're going to be covering that. And thirdly, we want to cover consumer spending in Black Friday and how that will potentially impact and how that's showing the US economy is generally positive, but are there some weaknesses coming along in the next few months in the US economy? So, without wasting any time, I want to go straight into sharing my screen and showing you guys where we stand in terms of what's happening today in the markets and what I'm looking at related to these topics as well as the overall analysis. Right, so as you can see here today, we have to focus on the jobs openings figures. These will be revised, most likely down, but let's see. Everybody's got their eyes on this, and also Jerome Powell today. So it's a big week in terms of where we stand with jobs this week, especially with the shift that the Fed have made recently by focusing on protecting the jobs market and keeping it strong. That's what their aim is at the moment. And then later on in the week, we have unemployment figures in the US. So that's something to watch out for around 3 p.m. UK time in the US market. And this should impact the stock market overall. For me, I am slightly worried here. I was expecting a slight dip, but if these come out positive, we're probably going to go higher and push through that 6,100 level on the S&P 500. So yesterday, we saw the market do fairly well. We saw the S&P 500 close a little bit higher. The NASDAQ, we saw Microsoft, Google, Meta, Tesla do really well. So large caps did very, very well. And then a bit of selling on these medium caps and the slightly smaller stocks here. However, we did see, and we also saw tech doing really well. That's the main aim here. So tech picking up again, especially after a bit of a sell-off in the last few weeks, especially in the semiconductors. And this is where I'm looking at potentially for a play. So looking at semiconductors, I traded 2 yesterday. I mentioned it in the video yesterday. So that's something you guys can go and watch from the previous video. Now, with the NASDAQ, like I said, we saw the highest growth out of all the indexes in the NASDAQ. We're talking about US indexes here. The NASDAQ was 1.27% yesterday. So good close here yesterday. And I'm expecting this probably to tick up a little bit higher today as well. That's something to look out for. And if we do move higher, we're probably moving to around 21,500 on the NASDAQ. But I'll cover that a bit later. Now, on consumer spending during Black Friday, we've seen an uptick there. So with MasterCard, they've seen an increase in spending by 3.2% when compared to the previous year and during the Black Friday period. On Black Friday, it's showing that consumers are still quite confident and they're willing to spend more in the US, probably showing strength in the US economy. However, I'm not too sure that everybody buying during this period is buying with money that they actually have. I'm assuming a lot of these people are purchasing items such as tech, jewelry with credit. Okay, so that's something to watch out for. And probably in 2025, we will get that dip around 10% because of high consumer spending and a number of other factors that I've been mentioning here pretty much every day and every week. Okay, so that's something to watch out for. But overall, very, very positive. I'm seeing strength in the US economy. based on the seasonal spending. With this data, though, with there being strong, as Michelle Mayer says here, Black Friday was a good indicator on how the holiday season is positively shaping up. Okay. So we're expecting positive spending all the way through into Christmas and probably a bit later on. Okay. Now, one of the other themes today, one of the topics I want to cover was insider trading. Okay. We've seen a high level of executives sell stock at these all-time highs. Okay. And we've seen the highest level since 2021. And we all know what happened after 2021. There was a bit of a lag here, a couple months. So 3 months. And then we had a big sell-off in the markets all the way to the end of 2022. And then now we've had this big move higher from 3,800 all the way up here now to 6,000. Okay. But at these levels, if insiders are selling, I am worried because it probably means that they know something that we don't know. The other factor there is they're probably worried about forward PE ratios, and we've discussed this here in my channel quite a lot. PE ratios, forward PE ratios, and a number of other valuation metrics that I think are worrying for the markets. So moving forward, maybe these CEOs don't expect the stocks to do well and the overall market to react negatively to them. The other thing I want to say here is potentially they're seeing signs that institutions are going to start selling on these highs. Now, for me, I do think that we're going to get another move higher. So in December, probably we're going to go all the way up to 6,300, and that's something to cover a bit later. And then maybe into 2025, we'll get a move higher to 6,700. Well, that's what the institutions are saying, so Goldman, etc. And they're getting retail investors going into the market. And I mentioned yesterday this data, but I'll reiterate here today. We've seen a considerable move of household allocations in stocks, and now it's at all-time highs. Okay, 41.8%. We didn't see the last time we saw the allocation at these levels was 2021 again. So this is again other data aligning with my thesis that we're getting at that tipping point, at a point where we should be worried about the markets a little bit and anticipate a drop in the markets in the next few months. So again, I don't think it will happen short term. I think it will happen in 2025. But how deep that sell-off will be is something that I can't predict, but I'm expecting 10 to 20% here. Okay. Like I said, previously we had levels here that we peaked in household allocations. We're having insider selling. Now we have a story building here that we potentially could have a big sell-off in the markets. On top of this, I also want to mention index funds. We had a shift earlier this year, January of this year, where passive assets, so index funds, allocation in passive assets outweighed active assets, so mutual funds and investing in investment funds. Okay, so actively managed investment funds. We've seen a shift there for the first time ever, and a gradual growth curve where people are investing in index funds. And this is something to worry about. Michael Burry mentioned this in 2019 as something to worry about because we're now seeing a passive investing bubble that is inflated steadily over the last decade. And he compares it to a theater that's overcrowded, and the only way anyone can get out is by trampling each other. and still the door is only so big. Okay. So he's expecting some sort of bubble, some sort of moment where the passive investing index fund industry will implode. And this aligns again with household allocations in stocks being at those all time levels. And also, we're getting other data such as insiders selling. So, all of this could combine in a big sell off in the markets. Okay. And the reason why that is people are buying baskets of assets. Okay. When they're buying baskets of assets, they're not checking on whether the stock is worth the price. They're just buying all 400 stocks in the S&P 500. When you're buying individual stocks, you get to analyze and look at the stocks and see whether they're worth what they're actually priced in at. And this is why we've also spoken about PE ratios quite a lot here. And I covered PE ratios and forward moving PE ratios at these inflated levels. Okay, so there's a lot of reasons as to why we should be worried and cautious going into 2025. I'm not saying sell off or sell everything that you have. I do think that we're going to get more upside, but again, the story is building here slowly for this potential sell off in the markets in 2025 or even 2026, depending on how much further this move has in the S&P 500. Okay. Now, in the short term, I want to cover December. This is obviously as a swing trader, I'm looking at 1 month, 2 month periods. November's been very good to me. I've made 20% in November on my portfolio. And now I want to look at December, how December is going to perform. And statistically, when we look at year-to-date returns, when we are up year-to-date going into September, 20% or more, we tend to have a positive December as well. Okay. So around 90% of the time, we have a positive December. So here are all the examples of where we've been over 20% in performance in the S&P 500, and only one time have we had a negative December in 1996, minus 2.2%. And when we're around this 25 level, which we are this year, in 2019, we've been at this level. 2013, we've been at this level, and we usually perform around 2 to 3% when we're around these levels. Okay, so we can see here again 2 to 1 point something percent. So at this level, I'm probably expecting about 2 to 3%. Okay, for December, on top of what we've already achieved. So this is just the S&P 500, not individual stocks that I select. And something that's helping, I think, the markets with this bullish momentum is a shift in sentiment. We've seen a shift in sentiment to bearish in the markets. And although for most people this would seem as a negative thing, it's actually a positive thing if you're investing on the bullish side. It's providing more investors that we can trap in on this bull movement. Yes, we're at all-time highs, and there is a little bit of worry there in the markets. However, I think we're going to grind higher going into the new year, and we've just trapped. We saw a lot of people going into bearish trades last week and after the election, which is probably a bad move considering that after the election, we tend to have a bull run in the market. So this final run that we expect. And I feel for those people that have gone in bearish, because I think they're going to suffer in the next few months. And when we look at what will happen in the next month or so in terms of the data, economic data, we have the jobs data in November. We have CPI as well. And then we have the FOMC meeting here, but we also have jobs data this month as well. Okay, on the 6th, which is employment data. And then we have a bunch of other data coming out, which will drive prices higher. At the moment, we're around 6,000. With this data coming in, if we can get some positive catalysts, then we can move higher. Maybe we get a bit of hesitation around the CPI and the jobs data because of fears with those two. For example, with jobs, we can see a potential higher unemployment going into the new year. I doubt that will happen because we're going to have part-time seasonal jobs picking up the data. CPI as well, we've seen a bit of an uptick in inflation data. So people are going to be worried. Maybe we're flat around this period, and then with this Fed lowering interest rates, hopefully later on this month, then we can probably see an uptick in the last 2 weeks. And again, this goes in line with what I've said before. So we have Thanksgiving, which is good for the stock market leading up to the new year. But in between that, we tend to have a bit of a sell off around the midpoint of December. So early December, the mid December, we get a sell off, and then we get another pickup in the markets going into the new year. And this is what I'm expecting. So here, on average, it makes around 3.78%. I'm expecting around 3% on S&P 500 and around 5% on the Russell 2000. And when we're talking about December as well, we have to talk about whether December is the worst performing month of the year. And we've had good months pretty much every month of this year, apart from June and August and a few other months earlier in the year. Only in 2018 we've seen December perform as the worst month. Okay, this is the one time it's ever done that. With this data and all the other factors I mentioned, I'm seeing positive movements in December. I'm seeing December being positive, maybe 2 to 3% for the S&P, around 4 to 5% for the Russell, and then that means that we'll close positively going into the new year. Now, going into the new year, we've also seen other factors which I think will drive the markets higher. We've seen all of these industries and indexes do really well. The Dow, we've seen transportation, utilities, Russell 2000 do exceptionally well, which is where I'm heavily invested in. S&P 500 equal weighted, which is basically the smaller stocks in the index, and some financials and cyclicals, which we've mentioned before. The other sector that I wanted to mention, though, going into the new year as a potential play, especially where it is right now, with Nvidia and other tech having sold off a little bit, semiconductors having sold off a little bit, is technology. Okay. In 2016, if we're expecting a similar setup to 2016 in the markets because of Trump winning the election and similar policies coming in 2024, what we saw in 2016 was an uptick going into the election, which I had a bunch of stocks that I invested in that were tech stocks and did exceptionally well during that period. A bit of a sell-off after the election, and then around end of December, early January is when we start seeing the move higher. Okay. And this move will probably see an uptick in semiconductors, tech stocks overall. And I also think it coincides with the crypto boom or alt season that will happen in the beginning of next year. Okay. So that's something that I'm watching out for. And I do think that we can get that move in crypto as well as tech going all the way into April and May of next year. Okay. And then we get that sell off again. As you can see here, typically we get a sell off, or we had a sell off in 2016. And that sell off around mid next year will be that 10% that I've been mentioning over and over again here on my channel. And it's very likely that will happen, in my opinion, because of all the factors that we've seen. We've also seen the Russell do the same kind of movements, or small caps overall do the same moves going into January. Okay, so from January to March and April, they do well. Again, these are heavily tech stocks and growth stocks. Okay, so The Russell will also do well, and I think the tech stocks in the S&P 500 will do well as well going into the new year. Okay, so that's where you should be focusing your money and looking to invest and trade at least for a 6-month period. Okay, 3 to 6 month period going into mid next year. And again, with the Russell, I've mentioned it before, but I think we could see a 40% move here on the Russell. Okay, factors here are forward P's and earnings are expected to be positive going into 2025. Okay, now going into crypto. So we covered stocks, we covered all this kind of data on stocks and some of the themes I mentioned earlier in the video. We want to go into Bitcoin again. Bitcoin, I mentioned it yesterday. I expect this to do well, probably around the 200K level on this run. We ran and we started this run before the election, and we always do that. But after the election, 1 year in, we do see a really strong uptick of around previously 2000 something percent, 390% in 2021, and probably around 200, 300 here again, in my opinion. The other topic I wanted to go into, which I mentioned earlier in the video, is alt season. Where are we in the alt season? I mentioned this data yesterday that after January, we usually see a good run in alts, or in particular Ethereum. So going into January all the way to June, this coincides with the tech chart that I also mentioned about the S&P 500 tech stocks and the Russell. So January all the way up to May, June, we will probably see a good move in the markets. Okay, that's something to watch out for. That's where you should be positioning your money to make the most out of this move. Okay, in terms of where we are in the alt season, phase one is usually Bitcoin moves, then we get Ethereum moving, and then we get some large caps moving, and then an alt season kicks in with these smaller alts doing really well. I think we're probably seeing a mixture of everything happening all at the same time at the moment. We've seen Bitcoin move, but we've also seen Cardano do exceptionally well. Okay. And then recently we've seen Bitcoin stagnate, stay flat, Ethereum move, and then every other day or every day we get a new altcoin that's doing 15, 20, 30% and moving well. And these are usually the larger caps, so the top 100, 200, okay? And we've also seen recently XRP do really well, okay? So all of these are doing exceptionally well during this period. And then we get the fourth stage, which is alt season. These are going to be the tiniest random altcoins that are going to probably pop off every single day, a new one doing 20, 30, 100%, 200%. This is the fourth stage. I think we get a mixed bag this year. Okay. I don't think we're going to get a typical, stages and phases of crypto. I think we're getting a mixture of everything happening all at once in reality. And now we're obviously seeing Bitcoin move in a flat line as Ethereum and other alts are doing really well. And the reason why is we saw an uptick in Ethereum being bought in the latter part of last month, obviously translated into people buying ETFs like the 2x Ethereum ETF. And also, an interesting fact is we've seen Bitcoin's dominance drop in the last part of last month. Okay, so the last 2 weeks of last month. That's another factor as to why now we're seeing inflows in alts and moving well. We can see, again, significant shift in dominance here. And when we get this, we get alts performing really well, which we have. And obviously, this will probably move higher with Bitcoin performing well again, as alts don't. And then we're going to get a constant cycle of money flowing in and out from Bitcoin to alts, from alts to Bitcoin. Okay. That's something to watch out in early January. But the key here is with alts moving so well, XRP, a few other ones, I've had a lot of newbie traders and casual investors talk to me about crypto again. And I think that's where the euphoria will kick in again into crypto. And a lot of new buyers are going to come in. And that's where we're going to get that big move in the markets. between January and June from casual traders and investors that are trying to jump in and FOMO in to the markets. Okay. That's the key here. Their greed will come in. If we're trading effectively, we'll be able to take advantage of that move and sell off at the right time, like I did in 2021 and like I've done over and over again. And I'll be sharing here where I think the sell off will be. Okay, so that's the overall market analysis done. I want to now go into some charts. Since we're talking about crypto, I want to go straight into crypto. As you see in here, Bitcoin dropping off a little bit within this wedge that I mentioned yesterday. I expect some consolidation here and then an uptick in Bitcoin and then probably inflows and outflows happening between alt and Bitcoin and a shift in direction here. Ethereum, again, dropping off a little bit here as we're seeing these larger cap alts doing well, like Cardano again, pushing up higher here for me. I'm up about 200% on Cardano, 250 probably. Yeah, 230 here. And then Filecoin moved really well in the last few days. Very slow starter here when I first got in, and then just huge uptick in Cardano, and I've already achieved my first target, which is 89%. But this can go much higher. I mentioned it, gave it for free to everybody on my Telegram group, so go and join that. The link is in the description. Matic, okay, Matic again, 10% today, but it's been doing these like 7-8% days. Okay, 10% today, and I'm now 2x on Matic. Okay, around 2x on Matic, and I think this can go higher again. Like I've mentioned, we have potential to go over $1 and then maybe even to $2 if that bull run comes in on alts in the next year. It's 1%, but still performing better. Yesterday did well, 7%. Today, a little bit slower, but it's fine. I'm up around 100% on this one. Coin doing well here. Finally picking up a bit of momentum, but it's lagging behind the other ones I mentioned here. That are part of my portfolio. I didn't buy XRP. I didn't buy a bunch of other ones, but XRP has been doing really well, and I wanted to cover it here just to show that there are now shifts in momentum and alts are doing really well. Some of my private members bought XRP and a bunch of other cryptos that I didn't buy. Of course, I can't buy everything. I don't really need to. I can position myself in a few and put in a large amount of capital. But XRP did really well. I also bought FET recently, which hasn't done exceptionally well, but I think it's due a move. Once these other ones are done, I'm expecting this to move fairly well and then maybe do another 100% to here or 60% plus. Okay. But overall, if you're looking for trades in crypto, yes, you can buy now, but you're probably buying too late. And I'm expecting some sort of dip in the next few weeks. However, it might never come. If we have the euphoria and the greed kicking in, it's probably never going to come. Okay. And we're going to see every day it grinding up higher. If you're looking to trade alts, personally, I would wait for a dip and then I'll look to trade it going into the new year. So hopefully we can get a dip in December, maybe January, and then we can then buy into altcoins more aggressively. You guys can buy more aggressively. I'll probably position myself in similar coins, some of the top coins and tokens. But you have an opportunity there to buy and then hold until mid next year. Okay. With the data that I'm seeing and the information that I've been sharing here with you. Okay, that's crypto. Now I want to go into the S&P 500 and some of the key. The S&P 500 is ticking a bit higher. 6,100 is a key resistance area here for me. And then higher than that, I'm looking at 6,300, which is the level that I mentioned post FOMC meeting in December, mid-December. Okay. Then we can probably get an uptick in the last 2 weeks of December. This is what I'm seeing. Obviously, it might come um, with the way that I've mentioned it here, or it could just tick up higher constantly without that dip that I think was going to happen mid-December. Okay. The Nasdaq's moving higher, like I mentioned earlier. Nasdaq doing really well. The next level is 21,500. The Russell very flat yesterday, very understandable with larger caps doing well. Again, I was expecting a slight dip here anyway, but yeah, dip or consolidation, breakout above this all-time high, and then find support on all-time high, and then move all the way higher here, so that we can get around, I think around 5% by December, and then around 10%, 10, 15% by March of next year. The VIX yesterday stayed quite low here. Maybe that's the reason why the markets did fairly well anyway. I have mentioned this level around 12 as a key support area. Once we get to 12, then we'll probably get an uptick in the VIX and a sell-off in the markets. Probably could happen next week. Again, aligning perfectly with all the analysis and data that I've been mentioning as a bit of a sell-off in mid-December, early to mid-December. Going into other stocks, I want to go into some of the picks that I've made recently. I mentioned yesterday GCTS, semiconductor, moving a little bit higher here. So I decided to buy some on this breakout. I decided to buy some, and I'm going to manage this position very, very carefully. I bought some SMCI yesterday. I am up around, I think, 10, 15% on this move. I bought it on this candle breaking above here and moving higher. So I should be around 10% here. I have to double check. But yeah, so we are up around 15%, 14% with a move today. And I think if we can go back to this recent high or consolidation zone here, we can make around 130%. Now, I don't think it will go that high depending on how the market moves, but maybe we get another dip going into the December run, and then an uptick in December, and then a run all the way up to March of next year for that 100% plus. I'll be looking at AMD and other options here with semiconductors, but these are the two that I bought yesterday. Then I also wanted to share with you guys some of the pharma stocks I bought last week that are doing well. They're up around 18 to 20% on these ones since I've bought. So 20%, actually 18% on PNC. APLS is around, I think, 20% as well, with or 17% as well. And I think these can do around 40% in the next few days. So around 3 weeks is my holding period, and these can do really well. Olo is one that I've been holding. I'm expecting this to do well post January. Great stock, moving really, really well for me. I'm up around 40% in about a month. I do want maybe another 10 to 20% on this one, if I'm being honest. And Tesla, obviously, we know where Tesla is going to go. I've mentioned it here a few times. 400 is the target if we break above 360. This is the level I'm looking at. A break above 360, 400, and then we don't know where we're going to go in 2025. But I think we can get an all-time high again with Tesla very, very soon. Some very, very high levels, maybe 500, 600 with the robo-taxis coming in next year. With Elon being connected to Trump, I think we can get those approved in many, many states going into next year. So that's going to be a driving force for Tesla in 2025. There's a bunch of other ones. I've shared these yesterday, so you can go and watch the video yesterday. What I'm looking for in the markets, I'm looking at Chinese stocks again. I've mentioned this before. Lee is an option. I'm looking at EVs like Rivian, Polestar. This is one that I want to reinvest in. I'm also looking at Gevo, where I made 350% a few months ago. And I'm looking to re-enter on this one after this significant dip on the sell-off. So I sold around this area. As I've predicted, it's creating some sort of consolidation around this area, and then I want the breakout. The breakout gives me an option to earn around 100 to 189%. This could happen probably in January. Okay, these are opportunities that I'm watching very carefully. What happened in January? AMD. Okay, AMD is a semiconductor that I really like, and I like this level here that it's found support in. This is something that I will be looking at as a potential trade moving forward into the new year. Plenty of other ones. ChargePoint, First Solar is doing well. Maybe we can re-enter that one. I entered it a few months ago. Didn't do really well on this one, but First Solar is doing well again. We have one that I really liked, which was 10x Geonomics, TXG. Growth opportunity, growth stock, part of ARK Innovations ETF. And I like the bottom here. I traded this one over here in August, and it was very flat, so I just decided to sell for around break even. I think a little bit of a loss, like 0.5%, something small. And I'm looking to buy into this one again. Okay, especially considering that growth is going to do well, and ARK Innovations ETF will do well. Okay, and with these levels, I'm looking at 1 to 3 for 72% as well. Okay, so TXG is something to watch out for, especially seeing as I've been burnt. I think a number of other investors have been burnt on this move up, and it's consolidating here for a long time. Okay, it's been consolidating around this level. Okay, there's plenty of others I've shared over the last few weeks and days. If you want to go and ask me about a particular stock, you can go on my Telegram group. You can join that for free. The link is in the bio. You can also write to me personally, but you can also comment here. Comment here with what you want me to look at in the next few days, and I will look at it. No other stocks I want to talk about right now. There's plenty of other ones that I like, but I'm not going to talk about it here because it's just too much to cover. But what I do want to cover though is now commodities and Forex. I want to go into the dollar. I mentioned last week that the dollar is going to move to 107, then dip, and then now it's creating the second rise before the deeper dip, deeper fall in the market, so a shifting trend. So the euro and the pound are probably good plays here. Something to watch out for, something to play if you guys want to play those. If you want to play Forex, I don't tend to trade Forex. I focus on stocks and cryptos. They provide more upside for me, and I like the way they move. HSI is where I'm investing. I've also bought an ETF for HSI and the Chinese stock market, and I'm also buying individual stocks at the moment. I've spoken about this theme probably for about 2 to 3 weeks, over a month now. Very good opportunity. I did buy this move here going higher in mid-September, and I made around 20% on this, and I'm expecting another 30% here going into the new year in Chinese stocks and the ETF that I bought. Other one I'm looking at is the French market. I mentioned yesterday what I'm looking at in terms of the stocks. There's Orange, there's BNP Paribas, and a few other ones. I'm not going to go into that now again, but I want to go into the index itself. On a breakout here, this index offers at least a 6% rise. And then if we go back to all-time highs, 12%, 1 to 3, which is very good for an index. The DAX has moved higher. I covered that yesterday. Not worth covering here because there's no opportunities that I like. I want to go into oil. Okay, oil keeps consolidating here. I've mentioned it over and over again. This is the play, a 12% move on oil with me playing other stocks that are connected to oil that would do well if oil prices rise. Okay, so that's something that I'm watching out for. Oxy is one of those, Rig is another one, a few other ones that I've looked at as well. I'll just have to see what my screen provides me with when oil moves a little bit higher. Natural gas sold off a little bit yesterday, especially considering they went up as high as 40%, 30% on this move here, 40%. So a bit of a sell-off is expected. What else can we cover? I covered cotton yesterday as an opportunity to buy into on the breakout, but it's not happening yet. Last week I covered, okay, that's corn. Where is cacao? Soybean meals looks really well, really nice as well for an uptick. Okay, but cacao is still moving higher here. When I mentioned this trade about 2 weeks ago now, very, very good here, up around 19% since I mentioned, as a perfect setup, especially on this base in here. Amazing, amazing setup. Gold is probably the last one I want to cover. Gold and silver. Gold consolidating here. Nothing's changed since yesterday, since I covered it. So nothing really to cover here, but consolidation. This is what I'm expecting price to do. It's not doing it. And with silver, this is what I was expecting price to do. And I think it might be not following exactly as I expected. It did hit this level here. So now we could probably see this uptick to 31.3 and then a down and then a move up higher. So a higher low here and then a move up higher. That's something I'm watching out for. That's it for me, from me today. I don't want to drag this out too long. And if you guys want to check out some of the other setups I shared yesterday, go and do that. Go and follow me on, well, subscribe here first of all. Follow me on TikTok and Instagram if you want short form content. I also share the short form here as well with YouTube Shorts. So you're going to get little snippets of what I shared today in 30 to 1 minute videos. And also go and join the free Telegram group. I speak about these concepts and these ideas every day there with my members. And also comment below if you have any questions, any ideas or any thoughts. Comment below. I'd like to hear from you. Take care.